For more on tariffs and an overall look at our economy, we are now joined by editor-in-chief of ETF.com, Kristin Myers. Thanks so much for joining us, Kristin.
Yeah, of course. Thanks for having me.
Yes, well, let's start with today's news. A one-month pause on tariffs for the auto industry. What is your reaction to that announcement?
Yeah, so we've obviously seen exactly how investors feel. Markets literally did an about face, a 180 turn, and then we saw markets now marching upward again by quite a bit. Markets had already had a bit of a rebound on just frankly the news this morning that there would be this conversation, that there would be a potential for a pause. But we have now seen markets really jump on this news. So this is something that investors like because frankly, tariffs are not great for the economy. They're not great for markets. They're not great for investors and even auto ETFs. So those are the exchange traded funds that are investing in the autos industry are all again back into positive territory. Now, what we really need to ask ourselves, however, is what happens after this month-long pause? What happens after those 30 days? What is essentially going to happen for those auto tariffs? And really, what's going to happen for this trade war, really writ large? Unfortunately, President Trump is a pretty unpredictable president. And these economic policies are no one can really invest around or really know what's coming next. And so, honestly, I wish I had a crystal ball, but this is honestly, truly one of those wait and see scenarios and situations that we have.
Well, next up, financial experts, look at indicators to determine the future over the last few years. Now, the U.S. has had an inverted yield curve, which means long-term investments held less risk than short-term. Anytime
Yes.
we've seen an inverted yield curve since 1980, a recession has followed. So can you please explain more about what an inverted yield curve is and if you foresee a recession looming?
Yeah. So as you just mentioned, every time that yield curve inverts, we typically have a recession afterwards, except the last couple of years. Now, the yield curve was actually inverted for about 2 years, from 2022 into 2024. We had another yield curve inversion just last week. So does this mean that a recession is coming? I hesitate to say yes, just because the US economy has continued to hold strong. So again, taking a step back a bit, what the yield curve means, usually it slopes upward because essentially investors are demanding more money to lock up their money for longer periods of time, which is why the yield or the interest rate, you can think of it in that way, for something like a 10-year bond, a 20-year bond, typically is higher than that of the yield or the interest rate of a shorter term duration bond. A yield curve inverts when essentially the yield on those longer term bonds actually drops, which means it is less risky for an investor to have their money locked up for 10 years than it is for that money to be locked up for only 3 months, 1 year, or 2 years. So what that essentially indicates is that investors in the markets think that there is going to be a shakeup in the economy in the near term. But again, as I mentioned, we've had this recession indicator flashing for the last couple of years, and we haven't had a recession yet. Again, the US economy has continued to hold strong. We've had pretty strong levels of inflation. The Federal Reserve has cut rates, which has now paused. So, do I think a recession is coming? I think that the base case is larger than zero, but I don't think this is a time for folks to start running out and freaking out that a recession is coming tomorrow. I think, again, this is just some time for you to say, hey, let me cut back on debt. Let me increase my savings and prepare for any potential economic downturn that we might have.
All right, Kristin Myers from ETF.com. Thanks so much for joining us this afternoon.
Of course.